Hello guys, so today we're gonna be presenting about value investing screener. So this is our overview. So first one we have introduction, secondly we have financial statement KPIs, third one we have balance sheets KPIs, and fourth one is other metrics. Lastly we have the sorting algorithm that we are using. So here is our group member. So let me introduce you to our projects first. So this project is aimed to reduce the time required to research company with a durable advantage for investment purposes. And the method we are using here is the principal guide. Guiding these projects are derived by the books of Warren Buffett and the Benjamin Graham books, as I have the picture on both sides of our screen here. So let's take a note first that this project is not designed as a trading algorithm, so it is important to understand the difference between investing and trading and how they approach the market with different strategy. And to be honest, trading is kind of like gambling in a way too. So you have to understand between two. So the reason why we choose this project, so this project was selected to uh, cut out the time consuming method of selecting stock one by one, and we utilizing an algorithm based on Python and Yahoo Finance KPI to accelerate the calculation, but also reduce the potential human error calculation too. So this enhancing our accuracy and efficiency. So reason why we apply with this algorithm. So the principle is based on the books that I mentioned earlier by Warren Buffett and Benjamin Graham. So it also has been proven over time that there is metrics are enhancing the accuracy of financial analysis, making it a valuable approach for modern application. So first off, we have the financial statement KPIs. So first one, gross profit margin. So here's the formula: revenue minus the cost of goods sold divided by revenue times 100. So what does high on gross profit margin means? It means that company have the freedom to price their products, or they have the flexibility to price their products. So as a rule of thumb, the gross profit margin should be higher than 40%. So second off, we have ROE, or return on equity. So this is our code. So net income divided by shareholder equity times 100 again. So it should be more than 20 to pass this condition. So indicate that high return on equity is making a good use of the earning that retaining. As the time go by, these high return on equity will add up and increase the value of your business. So moving on to this one. This one is SG&A, is a short-term word for selling, general, and administrative expense. In the Warren Buffett and interpretation of financial statement, Buffett discussed that SG&A as a part of company operating expense. So it's related to selling products, general business operation, rent, advertising, and he stated that the SG&A value to revenue should be less than 30% to be considered as fantastic. So as you can see here, we use SG&A value divided by revenue times 100. So this is the condition we are using as a code. So moving on to balance sheet KPI. Firstly, we have debt to shareholder equity. So the debt to shareholder equity ratio measures the degree to which company is financing its operation through debt versus its own equity. A ratio that below 0.8 suggests that company relies on equity than debt, which means that it is less risky, and lower ratio also indicate stronger equity position and less financial leverage, means that a company is less dependent on the borrow fund, and it is potentially making it more stable. So in here we have the code is the total debt divided by shareholder equity. So this should be less than 0.8. Moving on to current ratio. So in the book it stated that the current ratio measures the company liquidity. You know that why a current ratio above 1 is traditionally considered as good, but some company might not be up to the marks, but still can be a very good company. But we decided to go with 1 as a traditional way of valuation. And here we have the current asset divided by data from current liability, and it should be less than 1 to pass this test. So current ratio, cash ratio. Warren consider cash ratio to be greater than 1 because it's showing the company has enough cash and cash equivalent to cover its short-term debt without. So this strong liquidity position means the company is well prepared to handle an expected expense and economic downturn. So let's moving on to the next one. This one is quick ratio. When in the book it stated that the quick ratio should be greater than 1 because it indicates that company have enough liquid assets, excluded inventory to cover its current liability, mean company can quickly meet its short-term obligation without needing to sell their inventory or seek additional financing. So here's our code too. Moving on to other metrics. So first one is ROIC. So in ROIC, as you can see here, we have to calculate that NOPAT and ROIC is because the API doesn't provide us with this data, so we choose to generate out itself. So let's talk about NOPAT. NOPAT is a short-term word for net operating profit after taxes, and ROIC is return on invested capital. So Buffett identifies that the management is reinvesting the firm retained earning and how they're able to be growing over time with fund earning in previous year firms, and 30% on reinvesting capital are considered as outstanding. So here's our code. So ROA, or return on assets, is another metric. Buffett also considers ROA that more than 10% to be good because it's showing that the company is highly efficient at generating profit from its asset. A high ROA means that company is effectively using the asset to produce the earning, which is a sign of strong management or and operating excellence. So last one is the intrinsic value. So in Benjamin Graham book, Benjamin Graham often be referring as the father of value investing and introducing the concept of intrinsic value. So what is intrinsic value? Intrinsic value is the independent price of its own market price. Market price is the price where you can see on the stock price daily. And he believed that investors should be focusing on the company fundamental value rather than stock price, which can be influenced by market sentiment or other external factors. So intrinsic value reflects on the company price itself, or how well you paying for the price. So let's see the calculation. So here we have the calculation for intrinsic value is EPS times 8.5 times 2 times growth rate, also times 4.4 divided by corporate bond yield. So let's look deeper in this value. And so 8.5 referring to PE of a company without growth, and 4.4 is average yield of AAA corporate bond. So after we calculated this, we save it as an intrinsic value of the company. So the sorting algorithm, we choose to go with bubble sorting because it's the one of the simple way to do sorting, and the simplicity make huge difference in our coding. So this is our bubble sorting. So here's our flowchart. So as you can see, so here after you listen to our presentation, you can take a look into our slide to see all the code and the collab link. But so as you can see here, this is our full code. So we use API from Yahoo Finance to fetch all the data from each and every company in here, which is this is all the company hard coded as in NASDAQ 100. Then we also set an expected growth at 8%. And so basically what we done here is we fetch all the data and we also calculate some of it here. And moving on to this part, we calculate NOPAT and ROIC as I mentioned in the slide earlier, and we also initialize all the value we're gonna be using next. So I'm gonna be moving forward because I have already mentioned all of this. So as you can see here, we calculate all the things, then we sum it up and divide it by 8 to get x. Then we use the intrinsic value to evaluate again. So it's gonna be the intrinsic value, and we're gonna use this intrinsic to calculate it, the margin of safety we're gonna have on the stock price, and we use that to do the ratings. So as you can see, we repeatedly did it for 100 stocks in NASDAQ 100, and we use bubble sort to sort the result out. So we're gonna be sort from the highest rating to the lowest rating, and we print everything out. So basically, so here's our run code, and as you can see, it's from the highest rating score to the lowest, and this is basically the 100 stock that we have calculated using this algorithm. So let's take a further look into the website. So we also have done the website. So basically what we have done is we use the same code, but we adjust it to make it right into a C code language. We done the NASDAQ 100 as the same one as we did the here, but we also included the 500 stock from S&P 500 also. So in here is where we keep all the data. So first off, let's take a look at the user. Now we have two users. This from the register page. So after you register, you will have the email in here, also as the password, but it is hard in this way. So moving on to the next one, we start all the value from each day. This is S&P 500, and we update it on a daily basis. So this is also the value from NASDAQ 100. The forum reply table is for replying in forum. So let's review it for you guys. So this is for the content, replying content, and this one is for creating the post, and here is from the calculation. So after this, for your personalized calculation, so if you have the company other than NASDAQ or S&P 500, you can calculate it by your own, and it's gonna be intact with your user. So here's our website. This is our main page. So as you can see, we have all the buttons, but let's moving on to display. So this is our display. We show top 5 stocks of today which have the best rating. So this side is gonna be S&P 500, and this is gonna be NASDAQ 100 top 5, as you can see. And the chart can be adjusted up to your needs. So if you want to only view the stock price and the rating, you can take out the margin of safety and intrinsic value. But if you want to just take a look at the margin of safety or just the stock price, you can do it also. Okay. So let's moving on to the next table, which is our calculated table from what I mentioned earlier in the SQL. So here you can sort by the alphabet, okay, and also by the rating. And in here it shows all the value you need to know, such as gross profit margin, return on equity, ROIC, SG&A to revenue, debt to equity, current ratio, cash ratio, quick ratio, RONA. Okay. Also as the NASDAQ 100. And in this table you can also search for the company you want to just take a look at, such as Apple. Like this, you can search for its ticker and it's gonna pop up. So let's moving on to the calculator. Now in here you can do personalized calculation for your own company. So we're gonna moving back here, but let me see the community first. So here we can post, we can reply. Okay, we can reply, we can create a new post. We can post it here. Also, we could reply. Okay, so we have, and this is our about page. So let's take a look back at the company names and the calculator. So can do such as, let me do as company A, and let's say the growth rate at 8, the net income is at 400, total debt is 200, cash and cash equivalent is 200, stock price is 120, revenue is 200, shareholder equity at 111, current asset has 300, quick ratio at 1, earning per share is 3, cost of sold good is 40, and SG&A is around 20. So the current liabilities are around, let's say, 25. RONA is 10, so you can calculate, and we're gonna do the calculation for you.